Hi, I'm Barbara Friedberg, former portfolio manager and university investments instructor. I have Ken Leoni with me today. He is the VP of Marketing for Stock Rover.
Hi, Barbara. So, a quick overview of what Stock Rover is. So, Stock Rover, it's a software as a service platform. It can be run on your desktop, and we also have a component that is optimized for a tablet or a phone. And what the platform allows you to do is to quickly target and identify stocks and ETFs that you'd like to invest in. And then once you've invested, the platform comes with an extensive portfolio analytics capability that allows you to assess whether the equities that you've purchased are effectively, whether the equities are punching above their weight or not, and whether you want to make any changes to your portfolio. So the premise behind the Stock Rover platform is that you should be able to target investments that you would like to invest in. So they can be stocks, ETFs, mutual funds. You identify the stocks that you'd like to invest in, you invest in them, and then you can take Stock Rover and connect it to your brokerage and using portfolio analytics, analyze whether those investments are bearing fruit.
Exciting. I want to dive in and show our listeners and watchers what it's all about. Now, before we get started, let me tell you, this is comprehensive. And if we were to show you everything, you'd have to pick up a cup of coffee and sit down for hours. But don't worry, we're not going to do that. We're just going to give you a taste, and then you can head on over to Stock Rover if you think it's for you. And you can poke around. They do have a free plan, which is great for those of you that just want to experience it. So, Ken, what do you think is the first thing we should cover today?
What I'd like to do is show you an example of a screener in Stock Rover. Now, there are multiple platforms that have screeners, but what you'll see is that Stock Rover has some unique capabilities in terms of the type of data that you can screen for, and more importantly, how we present that data to the user. So the whole idea behind Stock Rover is to allow you to quickly and easily identify equities that you'd like to invest in. So we, for lack of a better term, we kind of cook the data, and we, as we'll see, we show you information that's valuable so that you can quickly assess, is this a stock or an ETF or a mutual fund that I'd like to invest in?
Perfect.
Okay, so we're going to start. I'm in Stock Rover here. I'm at markets. There's all kinds of options in the start menu here. We're going to focus on screeners. So let's go to screeners here. So a screener in Stock Rover obviously is how you screen for equities. And there are a lot of out-of-the-box screeners in Stock Rover. I have a tooltip enabled so that we can quickly and easily see what the criteria is for our screeners. Keep in mind also that there's a library here where I can actually import other screeners in Stock Rover. Stock Rover comes with about 150 plus screeners. We're going to focus on this screener here called the GARP Premium Plus screener. It's a growth at a reasonable price screener. And what we see here is the criteria that Stock Rover is using. Now, this is all out of the box. Okay, you can simply log into Stock Rover. You can grab the screener from the library, and it'll load right up. And what we
I'm
can
going
see
to
here.
interrupt you for a quick second. For those of you out there who aren't sure what growth at a reasonable price is, those are your stocks that are growing nicely, but are not overvalued according to typical metrics. So many of you might want to look at stocks like this to add to your own portfolio.
Thank you, Barbara. Yeah, exactly. So what we see here, for example, is that this screener is looking at a Morningstar rating. I'm not going to go through all the metrics here, but it's looking for a Morningstar grade of an A or a B. The company has to have a sales growth current year and next year greater than 2%. But what's really cool here is we want to see is the earnings per share now greater than they were for a trailing 12-month period 1 year ago? Are they greater? Is the earnings per share greater than from a trailing 12-month 1 year ago to 2 years ago? And we're looking at things like sales and operating income, et cetera. So there's quite a few metrics here that Stock Rover is looking at. In addition, at the lower part of the tooltip here, we see rankings. And what's really cool about Stock Rover is in the event that a screener returns a large number of tickers, you can assign weights and ranks to these to the metrics, and then we'll return the top X number of tickers, whatever it is that you're targeting. So what this allows you to do is, let's say a screener returns, I don't know, 200 and something tickers. You can say, well, I'm not going to look through 200 and something tickers. Give me the top 10, 20, or whatever it is. So this is what this screener is doing.
That is so cool. And what I'd like to throw out is a question. So does that mean if I want within that screener, I only want the stocks that are growing faster than a certain percent? I could screen for those additionally from the list that you came up with?
Yeah, you can do that. And what you can also say is like, I don't know, earnings per share is really important to me. So I'm going to give that one a higher ranking than something like price to sales or price to book. And then what Stock
Great.
Rover will do is it'll assign a ranking to that, and then we cook it all up. So in this example here, um, let's show what the information that Stock Rover returns is. So we have something called the table and a chart and something called the insight panel. And the way it's organized is, if I look at the table, these are the tickers these are the top 15 tickers that this screener just returned. Okay. And we can see the metrics as well that are relative to the growth at a reasonable price screener. And if I want to look at a specific ticker, like, I don't know, Salesforce, for example, there's all kinds of options. So, for example, here, first of all, I can see it has a margin of safety of 16%. Well, what does that mean? That means that my favorite analogy is if you're jumping off a bridge and it's a 100-foot bridge, well, a margin of safety means that the bungee cord stops at 84 feet. You don't hit the ground. So this means that this stock has room to grow. Margin of safety is based on the discounted cash flow analysis of that stock. We can see here that Stock Rover also assigns a growth score to the stock, and we'll get into that a little bit more, but the higher the number, the better. So 100 is great, so it's at 98. That means it's a high growth stock. It's also at 52 from a value. Well, think about it. That means it's not overvalued. And we can go through all these metrics, but in the interest of time, let's show you another feature here. I'm going to right click and show historical data. So what this did is it looked at each of the metrics in the row, if you will, because the table, think of it as like Excel, except we didn't have to figure out how to load it. Stock Rover just made it so. And what we can see here, for example, is that we're looking at Salesforce, ticker CRM, and it has consistent sales quarter over quarter growth, which is important to us. That's something that we'd be really interested in. Okay. So again, when we look at the table, we have all the metrics that are available to us that Stock Rover has evaluated for this screener. But you know something, I want something a little bit more visual. So let me go to the all options here. And we can see here we have the chart and we have a price chart, but I want to look at something a little bit different. So I'm going to go to valuation and I'm going to bring up something called the football field. And let's do this for CRM. And actually, let me just expand this to show just the chart and just the football field. So this is really, really cool. So what this is doing is it's looking at price to earnings, enterprise value over EBITDA, price to book, price to sales, all these metrics. These are valuation metrics. And what we've done is we said, okay, let's look for the last year. And of course, we can change it to go back 1 year, 2 years, or whatever. For example, for price to earnings, its lowest value in the last year was 39.2. Its highest value was 179.2. And this blue vertical line here is where Salesforce is right now. So we can see, for example, that it's currently trading at the lower end of its price to earnings ratio. And it's at the lower end of its enterprise value over EBITDA. And it's at the higher end of the price to book and price to sales. But as you can see here, you can quickly and easily assess from a valuation perspective how that ticker is valued. Now, in addition to looking at this, we might want to segue over and say, well, wait a minute, like I want to look at Salesforce, but I also want to look at it within the context of, how is it compared to its industry or to its peers? And I'm sorry, and it's been gapped. That's really important. Stock Rover relies on gap data. Okay. And then here we have scoring in Stock Rover. Now, in the insight panel, when you click on the blue eye, you get all kinds of wonderful help. Stock Rover's got phenomenal help. So here's the fair value. Okay. The company's fair value is currently $417.73. It's currently priced at $359. So there's that margin of safety we talked about. Now it's changed a little bit because this is real time, right? Here's our value. Okay, so we can see how it's scored over the last year. Its value is at 52. It has a high growth score and it has a high quality score. Okay, here we can see that there's a consensus rating for a strong buy. And here's where we get some really interesting data. So here we're looking at Salesforce versus benchmarks. We're comparing Salesforce to its industry and to the S&P 500. So for example, I'll look at the 1-year return. Its 1-year return is 44.1%. It's higher than its industry, which is 37.4%, and it beats the S&P 500, which is 34%. We were looking at valuation earlier, so let's look at valuation. Salesforce's current price to earnings is Salesforce's current price to earnings is 59.3. The S&P 500 is about 32.0, and the industry is 201.7. This is based on a weighted market cap value, by the way. So we can see, for example, how Salesforce compares to its industry and the S&P 500 in terms of price to earnings, price to sales, and other key valuation metrics.
I'm going to interrupt you again and just say, as a former portfolio manager, whenever you're evaluating a stock for purchase, you always want to compare that stock to its industry, because each industry has its various specific price earnings ratio ranges, growth rates, etc. So this data puts it right at your fingertips.
Yes. And also, we do the same for growth. Okay, so I'll just pick one thing. So, for example, its sales 5-year average is 18.6%. It's beating out the industry. We can also look at profitability and key technicals. Okay, now, in addition to looking at the Salesforce versus its industry, Stock Rover also can compare it versus its peers. And this is really cool. So here we see ratings versus peers. So Stock Rover's overall rating versus its peers is 91. So 0 is bad, 100 is really good. How did it get to 91? Well, it has a growth rating of 88, a valuation rating of 77, etc. Now, I want to learn more, like, how did Stock Rover get this 91 value? So I'm going to drill on this for a moment here, and I'm bringing up stock ratings. So we can see our overall rating of 91. It has a growth rating of 88. Well, how did it get the growth rating again? How did it get the growth rating of 88? Well, let's click on growth. So we can see that Salesforce is ranked 50th out of 428 companies in terms of growth. This is again versus its peers. Well, how did it get the ranking of 50th? Well, its earnings per share ratio is up there. Its earnings per share is up there. Its operating income is middle. Its EBITDA is middle, and its revenue is middle. But then here we can see more information in terms of its expected growth and revenue per employee and other intangibles. Here we see earnings per share and revenue. And then below, we can see the peers growth rating by sales. So we can see it's high for earnings per share. We can see where it compares to for operating income and EBITDA and revenue. And here are some of the peers down below. Similarly, I'll look at financial strength. So we can see it's in the 70th percentile for financial strength. It ranks 125 out of 428 companies. Again, this is using a proprietary algorithm. But what this allows you to do is quickly and easily see, how does this company compare against its peers? So Stock Rover is more than just saying, okay, here's what its PE ratio is, here's what its price to sales ratio is. It's actually, I'll say, cooking the data, if you will, to provide you valuable information so you can accurately determine whether this is something that you want to invest in.
I wish there was this tool when I was evaluating stocks in the 1980s, because this makes the work so easy.
Yes, at the end of the day, Stock Rover is about helping our customers make money and also do it in a way that is not time consuming. So what we want to do is provide valuable information in a clear and concise format that allows you to make appropriate investment decisions.
This was so helpful. And I can see down the left, you've got a menu of so many other types of analyses you can do. And if you were to think, oh, well, this is just for fundamental investors, it is not. There's plenty of charting, there's plenty of tools for technical investors as well. So I want to thank you, Ken, so much for going through this screener. This has been fascinating, and I want to invite all of you to give Stock Rover a try for free. We'll put a link below for you to check it out. Ken,
Yep.
any final words from you?
I would say that if folks want to trial it, it's a low friction trial. All that's required is an email address. There's no credit card or anything like that. And the product's pretty much fully enabled for you to test it out over the 2-week trial.
Thank you again, and really appreciate you stopping by to give us this hands-on tutorial.